Federal Reserve leaving interest rates unchanged at its September meeting, saying it will maintain an accommodative policy of interest rates until its inflation target is achieved. And then it goes on to say, in answer to the comments made by the panel there, it will aim for inflation above 2% for some time. That is specifically now in the policy statement as a goal of the Federal Reserve. It actually makes note of that twice in the statement, that it was now aiming for inflation above 2% for some time in order to achieve that average inflation of 2%. It also says it will purchase additional assets, treasury assets, as part of an accommodative policy in order to support the economy. It repeats language from previous statements where it says it will use its full range of tools to support the economy, and says economic activity and employment have picked up, although they remain well below the levels at the beginning of the year. The statement says that weak demand and oil prices are holding down inflation, but the path of the economy depends principally on the virus. The health crisis, it says, will continue to weigh on the economy, and it says it poses considerable risks to the medium-term outlook. There were two dissents, Robert Kaplan from the Dallas Fed and Neil Kashkari from the Minneapolis Fed. Different nuances on what they wanted in terms of policy. Kashkari seemed to want more of a commitment to 2% inflation. Kaplan wanted more flexibility. Let me tell you a little bit about the outlook for GDP here. They actually dramatically improved. They were looking for a 6.5% GDP decline. Now they're looking for a 3.7% GDP decline this year. On unemployment, they were looking for 9 and change. Now they're looking for 7.6. And then I'll go directly to the actual table here and put my glasses on and tell you what it says here. Inflation, they've upgraded from 0.8 to 1.2. And there it is, folks, the path of policy. I don't know that I'd ever thought I'd see this. 0.1 for 2020, 0.1 for 2021, 0.1 for 2022, and drum roll, please, 0.1 for 2023. I have not looked at the dot plots there to see if anybody has actually forecast a rate hike in 2023, but certainly the average there is 4 years of 0.1% Fed funds rate. Kelly, Tyler?
Have you, Steve, ever seen the Fed be so explicit with respect to inflation, saying we are targeting above 2% for a substantial, for some time, or a substantial time? I forget what your words were.
Tyler, you are correct in asking me to underline the importance of this change. No, I've never seen it before. It is a historic moment here where the Fed, for the first time, saying its policy now is aimed at an inflation number that is above target. It's not just trying to hit 2, it's trying to hit some number above that. I think David Kelly and others in the market will be disappointed that we don't have that number that they're aiming at, but they're aiming for a number that is above the 2% target in order to achieve average inflation. This is a moment that I didn't think I'd see, plus the idea that now the policy outlook is for 0.1% into 2023. And I do see 1, 2, 3, 4 hikes now in the dot plot for 2023. But that means that I believe 13 are at 0.1 or between 0 and 0.25. So there's 1 hike built in for 2022. I don't know how you get more dovish than that, Tyler.